All right, we're in the first week of December in 2023. So what is happening in the Minneapolis area real estate market? I have been following several metrics over the past few years, and there are a few that really stand out to me as indicative of how the market is doing right now. And I don't mean just price. I'm talking about the kinds of terms that are included in winning offers, things that sellers are now accepting or willing to do. And I will let you know what these terms are revealing about the current state of the market here. My name is Schumann, and I am a realtor here in the Twin Cities, and I keep my finger on the pulse of what's happening in the Twin Cities metro real estate market so that you can be an informed buyer or seller. The number one question that most people have about homes is whether or not prices are falling. I keep hearing this, and for the purposes of this discussion, I'm going to say, one, short answer is no. And two, let's look at this from the 7-county metro area. We're going to look at Minneapolis and St. Paul, as well as all of the surrounding suburbs. And we can look at it broken down by housing type. The first one that I want to look at is the most popular, of course, single family homes. When I was digging into data for this update, I decided to look at it over the past year, and I looked at the past 10 years because I wanted to be able to show you the trend lines for both. The other differentiation I want to make is between new construction and existing homes, because new construction is at a vastly different price point as a whole. And I'm going to talk about pricing for new construction, but I also want to mention that I see a big opportunity for buyers here. And if you're wondering why, I'm just going to put it this way. Buyers have a lot of inventory right now. They have completed homes as well as homes that are underway, and the completion dates are coming up. They need to get these homes off their books so they can continue to build. And the interest rates have really slowed things down for everyone. But the big builders are offering little sweeteners like rate buy-downs for buyers right now, along with all other kinds of incentives like appliance packages, contributions to closing costs, and things like that. All right, so things to consider are that new construction homes really are mainly being built in the third ring suburbs and exurbs. So if proximity to the city is important to you, you are less likely to be able to get one of these new builds, or at least one that's with a big builder that can afford these incentives. If we look at the pricing for new construction, you're going to see a slight dip in median price from the beginning of the year. I have read from multiple sources that they do estimate that it would take 10 years of consistent building for the builders to actually catch up to demand for homes due to the effects from the 2008 housing recession. We are still that far behind in meeting the demand for homes here. New construction is showing over 6 months worth of supply, but I want you to take this with a big grain of salt because builders list homes that are ready to go, but also to be built. So they're listing a plot of land that has nothing on it yet, hasn't even been dug. So that really does inflate the supply side numbers. However, the fact that it shows over 6 months is showing us a buyer's market for new construction, and I haven't seen that kind of number in a very long time. Things are very different when you look at existing homes. It is still a seller's market, although not the insane seller's market of a year or two ago. Homes are still getting multiple offers. The market is still moving. It's just not at that runaway clip that we were seeing then. And I say hallelujah. Previously owned single-family homes are sitting at about 1.3 months supply. That is firmly in the seller's market side of things. So you can see the difference here. So what is leading to this? Well, 80% of people with a mortgage on their home are paying a rate of less than 5% interest. 50% of them have a rate of less than 4% on their mortgage. So they need a really big incentive to go ahead and list their homes and buy a different home with a mortgage that's going to be at a much higher rate. This really is one of those cases where, as usual, if you have a good budget, you are at an advantage because you can buy new construction and take advantage of the market and the incentives, where those two things don't exist quite as much for existing homes, although you can negotiate rate buy-downs with existing homes as well. Prices on existing homes are lower as supply is lower too, but you don't have to pay for all those things like a deck, the multitude of finishing touches, window treatments, and all of the things that you have to buy for new construction. So, there's bonuses. Housing inventory that we have available to sell is dropping as we get into the winter and holiday times of the year. But the other thing that is slowing are price reductions. The percentage of price reductions that we're seeing is about half of what we were seeing 1.5 to 2 months ago. It was at about 14% of listings that were showing a price reduction, and now we are down to about 7%. So maybe agents and sellers are pricing correctly for the market now, or maybe they understand that it's going to take more than about 5 minutes on the market before that house is going to move. Another statistic of note are the number of distressed or bank-owned properties as a percentage of our active listings. We still have fewer than 100 of those listed out of 6,200 active listings. That's less than 1.5%. Other markets in the United States are not faring quite as well in this area, but people here are still meeting their mortgage payments. Okay, the terms that I was mentioning before, these are the things that really stand out to me as important. The first is that sellers are contributing to buyers' closing costs about 43% of the time now. That is the highest percentage that I can remember seeing. People including appraisal gap guarantee language on their offers has almost disappeared, although escalation clauses are still being included. But when you think about this, it makes sense because most sellers are now seeing themselves getting about 99 to 100% of asking price. So people aren't offering this huge sum of money over asking, and they don't need to put that appraisal gap language in there. Interest rates have been dipping back down, but it is doubtful that we are ever going to see rates as low as they were during the pandemic. And honestly, to that I say hallelujah, because it was insanity. This is likely going to spur some more buyer activity as we head into spring, which is also our busy time anyway. So just be prepared for that. You may be back in competition again. If you have questions about the real estate market in the Twin Cities area, city or suburbs, please reach out because I love to talk to people that meet me on YouTube. Thanks for watching.